Hello Mavericks, this is Imri and welcome to today's currency recap. It is Thursday, March 14th. So today we'll be doing our review of the trading day. We're going to be taking a look at basically what's been going on in the financial markets. Today we'll be looking at equities, commodities, and of course currencies. We'll be looking at the S&P 500, seeing if anything's changed in our weekly score there. We're going to take a look at some of the major news that came out today and see if there are any news events to close out the week. And then we're going to wrap things up by taking a look at some potential setups in the currency markets. Let's get right into it. In this currency recap, we'll be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we would love to meet you. So please click the application link in the description below this video. Now let's break down today's market action. Starting things off with some market analysis. So the big news today is that PPI, which is the Core Producer Price Index, it's an inflation report, came in hot above expectations, and it had the effect of deflating risk markets. So risk on appetite kind of vanished today, more pronounced in crypto, but we also saw that in equities. And the dollar was the main beneficiary of this hotter than expected report, as the dollar certainly outperformed its peers today. So if we take a look at what's happened, well, oil did outperform today, but the biggest loser was crypto, stocks slightly underwater as well, gold a little bit under also. And then as we look at our currency board here, we can see that the dollar was the clear outperformer, the pound up a little bit, yes, and the Aussie, the biggest loser on the day, followed by the euro and the Swissy. So as we look at crypto, we can see that Litecoin, Ethereum, Bitcoin, and Bitcoin Cash all significantly underwater today. But crypto has had a parabolic rally as of late, so seeing a pullback like this, if not even uglier, is not surprising whatsoever. So as we look at the market outlook, we still maintain a +3 rating. We're still above both moving averages, the 20 and 50, and the 20-50 moving average slope is pointed to the upside. So not much to add here. We briefly dipped into a +2 rating a little while ago, several weeks ago now, in fact, but the markets just maintain this really consistent +3 rating, which is truly impressive. But if we have, further follow through on the selling activity, then yes, the market score will change. If we look at news, we can see that tomorrow at 8:30, we have 8:30 a.m. Eastern time, that is, we have a manufacturing index report, and then at 10 a.m. we have consumer sentiment. Unless either of those reports is wildly out of line with broader expectations, I don't expect them to be extremely market moving in that regard. All right, moving on now to some currency analysis. So looking at our velocity board here, we've got the dollar to clear +3. Practically everything else is either at a 0 or a -1 as far as the fiat currencies go. At a -1, we've got the Aussie and the Swissy. And then crypto occupies the extreme side of that negative velocity spectrum at -3 or -2. So that said, let's hop now into TradingView to take a look at our currency baskets. So taking a look at the yen basket, so we have broken out of this trend line. Whether it's a convincing breakout or not remains to be seen, but we are in this resistance area right now, and we are so far seeing a fairly controlled pullback. I don't love the yen one way or the other at this moment right now. And the reason for that is if I draw a supporting trend line, you can see that we're kind of right on that supporting trend line right now. So we'll have to watch closely and see whether this is a valid pullback or not, or if we are going to break below this trend line. So I'm not favoring either the upside or the downside tremendously right now in the yen. I kind of want to see if we can break firmly and decisively below the support trend line. Barring that, then it's possible to look for some short-term long yen opportunities. As far as the dollar goes, so we're basically got this really nice textbook 3-wave rally, which in Elliott wave terms, we'd label this an A, a B, and a C. Let's see if that does coincide with an end to this phase of dollar strength. So the interesting thing is if I'm looking at the momentum indicators on the daily chart, the RSI is in neutral territory. On the 4-hour chart, it's in getting into overbought territory. And then on the 1-hour chart, it is quite heavily overbought. So it's interesting to see now what's going to happen. If I do pull up some moving averages, then what's really interesting is that we're at this convergence of the 20 to 50 and the 200 period moving averages right now in the dollar. So right here, this purple square that I just drew is where all three of those moving averages kind of intersect. So what does that mean for trading the dollar? It means I think you should be patient. Let the dollar go for now. Be very, very cautious with it, and let's wait, because whether this is a bear market rally that's ran into resistance, which personally, that's kind of where I'm leaning. I think we are going to get another strong push down in the dollar, but I just don't see the setup quite yet. Maybe after tomorrow, there will be some short dollar setups that become clear. And then the Swissy hasn't done anything. We're still languishing and chopping around in this support zone. Next up is the euro. So we had a strong breakdown into the euro, and we're now kind of consolidating. This looks like a really nice bear rally, in my opinion. So there could be some decent short euro setups out there. What I would like to see is a basing pattern below this trend line, which could then be used to short the euro. The pound looks like we're trading sideways. This is not really a base. I'd say it's more of a triangle. And I'm very simply put looking for a breakout to the upside of that triangle. And then finally, the Canadian dollar. I've been bearish on the loonie for a long time now. Nothing's changed, continuing to look for downside in the loonie. And then the Aussie dollar. So we've broken the neckline of this inverse head and shoulders pattern and then just chopped around sideways. But this does look like, despite today's weakness in the Aussie dollar, the potentially, a bullish breakout that's waiting to happen. So I'm looking for long trades, potentially, if they show themselves in the Aussie crosses. And then finally, we've got the New Zealand dollar, which has just traded sideways since the end of February. Not exciting in the least. So to sum up, there could be some potential opportunities in the yen, in the dollar, and then hopefully the pound's going to break out to the upside, because I think that's just simply the path of least resistance. Get a nice quick pop to the upside to meet the resistance level from August 2023, and looking for continued downside breaks in the Canadian dollar as well. So that wraps things up, traders. Long story short, relative strength and weakness, we talk about it every single day, and it's for good reason. It's the best way to put the probabilities in your favor. You want to stack the deck when it comes to trading, and when it comes to currency trading, playing relative strength and weakness is the best way to stack that deck in your favor. Of course, it goes without saying, always pay attention to proper position sizing and follow your trading plan. Next week, we've got the FOMC live class. That's from 11:30 a.m. to 12 p.m. Mountain Time. That's on March 20th. All right, traders, take care. See you soon. Bye for now.